Good evening, students. Welcome to this last session for this paper 7A. We are talking about Chapter 5, Core Banking System. And so before time, login chocolate. This time today goes to Akash Neil and Siddhant Digambar. So you both get the e-chocolate for being perfect on time. Okay. So Akash Neil has a query. So I'll come to the query as we start. Let us just start. I'll answer your query, Akash. I've got that. Thank you. So today, being the last session for core banking system, last session for paper 7A. So ask any question, anything that you want to ask. Okay. So we'll find time to try to answer. We had some students send query by mail, so they have been also responded. So we'll get a response directly from the institute. Yeah. So on this slide of banking fraud, I just recall that start reading financial daily newspaper if you have not done it still now. Okay. Then we had good sessions. Please keep your queries on. So this is the core of this subject. Again, we'll be talking a lot today also. Understanding the components of core banking system, impact of related risk control, appreciate the functioning of core modules. Then regulatory framework we are going to talk about today. Okay. So that was chapter overview. We have gone through that. Now these are the topics. Main topic 1, overview of banking services. Related IT, here is information technology, risk and controls, component and architecture of core banking system, risk, security and controls, core banking system, core business processes. So we were on this topic, few topic we took day before yesterday on the last class, and balance we are going to talk about today. Then we are going to talk about reporting system, MIS, data analytics and BI. This topic, I would have personally preferred lot of more input to be given to you, but I'll share more on beyond what is there in the module. Then applicable regulatory and compliance requirements. So main topic 5, 6 and some part of 4 that we are going to talk about today. In main topic 1, so let it be a fast recap of what we have talked about. The overview of banking services, the core banking system, core features of core banking system, then core banking system, the technology environment, the technology component, the functional architecture, internet banking process, e-commerce transaction processing, case study on deployment and implementation of core banking system. So that was basically part 2. Yes, Ayush, you can ask any query. Then risk associated with core banking system, security policy, internal control systems in bank. So it was a good understanding, good discussion. You participated very well in terms of the way you are going to approach a bank. So all this is important. I've already told you that this chapter, chapter 3 and other chapters of this module create your opportunities once you become chartered accountants. So I want all of you to look these chapters as from a perspective of a practicing chartered accountant, and you get an assignment and an engagement, how you are going to review that. Then this is the topic we are going to continue, the business processes on current account, saving account facilities, credit cards, mortgages, treasury, loan and trade finance. Then reporting system we are going to talk about, and regulatory and compliance requirement. I have kept time for queries at the end of the session, so you can ask any query from any, say you post it at say around 8, so that at the last time I can answer queries from other chapters also. So yes, anyone you can ask for it from any chapter. I'll love to answer that, and with permission, if you feel we want to extend, then we'll extend the class also for the queries part. Yes. Again, very important topic. In fact, this topic per se has become one of the most important 2 basic reasons beyond this. First is now everything is technology driven. We have already made that discussion, and the impact it is having on banking per se. And this itself is leading to a separate category of risk, that is in terms of money laundering and cyber crime. So we're talking in detail them also. This is how the chapter is configured. Okay. Now we are here on core business process. So we completed on mortgages. Now we want to talk about treasury process. So we'll go to the module. Let us have the breaks of it. So introduction, core areas of treasury operations, process flow, risk and controls around treasury operations. Now, the point is that treasury is one aspect that generally you don't come across during your articleship, or in fact your interaction with bank as a customer doesn't lead you to understand the treasury part. So we'll be talking about treasury operations in some detail, trying to create a business understanding of what it is exactly about. Okay. Now we talked about this two words, SLR, statutory liquidity ratio, and CRR, cash reserve ratio. In fact, during the class discussion of chapter itself, Government of India had modified the statutory liquidity ratio and cash reserve ratio. So what exactly these are? Now, because we'll be talking about these terms in treasury operations, so what Reserve Bank, our banking regulator, what it wants that whatever assets bank has, a specified percentage of asset banks need to keep as in terms of defined cash securities or cash balance, and a specified percentage the bank has to keep as a investment in specified securities. Now, when I say cash reserve ratio, so I think when we talked about in our class, it was something around 4%. It has been upgraded to 4.5%. Statutory liquidity ratio on day one of the class, it was 17.5. I think now it is 18%. So government has increased those. Now there is an impact of all this, the impact of increase of this CRR, SLR. We'll be talking about that for a general business understanding purpose also. Bank audit per se is part of your accounting topic also, your audit topic also, Banking Regulation Act, part of our law reading also, and now technology. So this topic is relevant to all the subjects that we are talking about. So statutory liquidity ratio. So the idea is that a specified percentage has to be kept in secured or defined securities. Now, when bank keeps those amount in defined securities, what are those securities? So on the slide that you are looking at, the security details are given. Generally, it is government securities, GSEC, shares, other investments such as CP, that is commercial paper, certificate of deposit, security, receipt, pass-through certificates, mutual fund units, venture capital fund, real estate fund, debentures and bonds. But what percentage is going to be kept in what will be specified in further detail. So bank cannot keep any percentage in any category of security. They are all defined, reasonably well defined. Now, bank invests in these securities. What does bank earn? So bank earns interest, dividend and appreciation on these securities. That whole aspect is what is treasury operations. So this is very important. Generally, during our bank audit as a article, or even in a bank branch audit, when you go, you don't get these details. So sometimes we feel not relating to the topic, but I'll tell you how you can relate much better. That 1992 Harshad Mehta scam. Now a lot of series are there. There's a movie also on that. If you watch those movies and those series, so that the investments which were not found, they were basically part of this statutory liquidity ratio investments that were missed out. So just have a cap of this. Okay. So then core areas of treasury operations. So what I'll read them and then we go to the flowchart from the module. Dealing room operation, front room operations, middle, the transaction processing, back office, and process flow, and risk and controls from the table. So let us go to the module, treasury operations. Just give me a second. Yeah. Here we are. Business process flow for treasury operations. Here we start. So investment categories are government securities, other investments. Now, there are multiple products. So that detailing we are not having. We are basically going to the operational aspect of treasury operations, how it is going through. The core areas of treasury operations in a bank can be functionally divided as front office. So let us read the headers. Front office, then middle office, back office operations. That is the three. So front, middle, and back office operations. What exactly is being done at each of these offices? So let us just read few lines. The front office operation consists of dealing room wherein the dealers enter into a deal with various corporate and interbank counterparties. Now, please understand, how does this get triggered? Where does it all start from? So ideally, it starts from that definition of statutory liquidity ratio. Bankers have to keep 18% of their time and demand liabilities in this specified securities. Now, and that has to be maintained on ideally day-to-day, month-to-month basis. So if bankers feel short, then they have to invest so that that much percentage of their time and demand liabilities are maintained in the defined security. So there, a bank is short, another could be surplus. So that buy-sell transaction is happening. There, this whole treasury operations is triggered. It starts from this level. Then deals are entered by dealers on various trading and communication platforms, such as an example has been given: Reuters trading system, telephonic conversation, or brokers, or any other private channel, because these corporates also can lend if they have surplus money. The dealers are primarily responsible for checking the counterparty credit limits, eligibility, and other requirement of the bank. So from a banker's perspective, what front office is basically doing, front office is creating that deal, that transaction, buy-sell transaction for treasury investments. Then what middle office does? It includes, this is important, risk management, responsibility for treasury accounting, documentation of various types, input into regulatory reporting, producing the financial result and analysis, budget forecast for the treasury business unit. This one paragraph has so many critical words built into it. So let us read those one by one, because you could have a multiple choice question of what exactly middle office is doing. Front office, that is actually the buyer seller of that security, but the code, the hard planning part is basically being done at the middle. What they are doing, risk management. So which securities to invest, responsibility for accounting and documentation. So when you buy and sell, it requires some documentation, input into regulatory analysis for the future, how your SLR is going to flow in the future, how your time and demand liabilities are going to grow. So all these are very interlinked businesses, interlinked decisions, interlinked information flow is there. All that is being done at the middle office. Risk management can range from agreeing overnight cash position for trading room. Now this is again, you must have, overnight means next 15 days, next 14 days, how banker is going to go about all these transactions. That is middle office. Then back office. The mainstream role of back office is in direct support of trading room or front office. So back office is supporting the front office. This office includes verification by confirmation, settlement, checking existence of valid, enforceable, just keep this word with you, ISDA agreement, reconciliation of nostro-vostro accounts. In this case, nostro account, that bank refers to account held by a bank in foreign bank, usually in currency of that country. So all these reconciliations, all this data input to front office will be given by back office. So middle office is basically risk assessment planning part. Front office is dealing with the parties, customers who are the sellers and buyers of these GSECs and specified security. Back office gives the valued feedback to front office. Then an important development in back office has been advent of STP, state through process, also called hands-off or exception processing. This has been made possible through enhancement of system to real-time online input and trading them. So everything is being done on a very real-time basis. So whatever transactions happen, they are reported. So just keep the words as they appear with you. Back office is also involved in number of reconciliation processes, including agreement of traders overnight position, nostro accounts, and brokerage. The critical one is front office, back office reconciliation. Yes, what means to ensure completeness and accuracy of. So back office might have asked that this you have to sell this, and to ensure that that has been done by front office. So it is basically intra reconciliation, intra bank reconciliation, a must to do, because it is a deep regulatory impact on the banking operation. Suppose back office says that you have to buy and front office does not buy, so SLR parameter may be missed out. So that is very important. Now, a lot of things have been automated. But before we go ahead, I want you to probably answer this question. It's a learning question. Whatever changes Reserve Bank of India has done in previous 2 days, 3 days, increasing the cash requirement ratio and increasing the statutory liquidity ratio. So you have to say first, does it affect any way bank operation? क्या इस दोनों रेशियो को बढ़ाने से बैंक के ऑपरेशन पे कोई फर्क पड़ता है? So you say bank operation affected? Yes, no. Second is more important question. If you say yes, then which aspect of bank operation you feel is affected due to this action of Reserve Bank? Basically, the first question is that increasing SLR, CRR, does it affect bank operation? You say yes, no. If you say yes, then you have to say what aspect of the bank operation is affected. It's a learning question. You answer, then we'll based on your answer, we'll learn more on this. Because why I want it to be done like this, because treasury operations generally we don't come across. So that interest element has to be built into treasury operations. Once you start getting the interest element, that understanding will become easy. Okay. Now the process flows. So let us take it. A good flow chart is there. So 3 headers: front office, middle, and back office. Pre-deal analytics, trade deal capture, position management, middle office, risk management, ALM. I was waiting for this word, asset liability management. Very, very important. Please understand. This word we are going to talk about again in next header, that statutory, this business intelligence MIS reporting. Okay. Pricing and valuation, position management, limit management. So this basic core planning aspect is done at the middle office management. Then back office is doing reconciliation, confirmations, settlements, and helping this accounting aspect to middle office. So this is exactly the core summary of the functions that front, back office, and middle office are doing. As we are discussing, there are questions you are answering. What is the question you are answering? The Reserve Bank of India, as it has increased CRR and SLR, so you have to say, does this affect the banking operation first? Second, for all of those who say yes, you have to say which aspect of banking is probably affected. Okay. Then, now deal trades from counterparty. So front office dealer captures the deal on front office system trading platform. If deal details are correct. So if it is not correct, reject the deal. If it is correct, process deals to treasury system, get the pricing valuation from middle office team, confirmation from back office, security fund settlement by back office team, accounting to GL for profit and loss. So very simple flow of events and have been given in banking treasury operations. So it's a good flow chart, and in fact it summarizes the core of the treasury operations very well. Now we want to go to risk and controls, but because we have answered the question, I'll first take the answer and then we'll come to this risk and control table. So yes, so Pooja says, does it affect banking operation? Yes. So all of you who are going to say yes, they have to answer another question. which aspect of banking operation is affected. So the right answer is yes, it does affect the banking operation. Which core banking function is probably affected by Reserve Bank of India's move of increasing cash reserve ratio and statutory liquidity ratio. Okay, by the time the chat refreshes, let us go to the next column. Now understand, see, treasury operations are big ticket. Big ticket means the normal ticket size, the normal value of this transaction is very high. From as small as 50 crores, you can have transaction up to 1000 crores. Much more than that also, based on the nature of the bank, the business it is carrying on. So treasury operations, the volume may be low, but the value per transaction is very, very high. Okay, just remember it. So just keep a tag of it. Now, so risk controls, unauthorized security setup in system such as front office, back office. Now this, again, please understand, I've already told that the volume is going to be low, but value is going to be very, very high. So any risk that you are looking is going to be very material risk because of the value involved in that. What you may seek appropriate segregation of duty, review control around security. So whatever is being done, there has to be proper segregation of duty built into it. Then inaccurate trade is processed. Inaccurate means there is some error in that. Appropriate, again, segregation of duties, review of controls to ensure accuracy and authorization of trades. Now, how do you do it? Segregation of duty is the keyword. If you look, it appears in both the rows. SOD, suppose an operator or a dealer creates a transaction, then before it is actually executed, the rules have to be so defined that someone within the system validates the transaction before it is actually processed. So this is very, very, very important. Just keep a tag of this, that this aspect is very important. Segregation of duty. Value proposition is very, very high. Any mistake can have disaster to banking operations. Okay. So you cannot have an inaccurate trade being processed. Then unauthorized confirmations are processed. Now, confirmation means you have done a transaction, the actual party is said has not confirmed, but you get an unauthorized confirmation. Again, very critical. Complete and accurate confirmation to be obtained from counterparty. How you do it now, because it is done through technology, now done through digital signatures. If you recall information technology, you have read. So in the purpose objective of information technology, if you read those one by one, one of the purposes written is this itself, that these transactions, these banking transactions, they can be validated through electronic mode. So that validation has to be built into system. Then insufficient securities available for settlement. Insufficient securities. Again, please understand that means that, okay, let me ask another question. I got answer to the previous one. So let me ask this one also. Okay. I allow this as an open book question. Okay. If this is a risk, insufficient security available for settlement, I want you to tell that suppose it's a risk, so there must be some error. So this error has been done at which office level? Front office, middle office, or back office? You can go up, read from the module. What you are answering the question? Insufficient securities available for settlement. This error has occurred due to faulty working of front office or middle office or back office. So you say, you can answer directly FO, BO, MO, like that. Now what you need to ensure? Effective control on securities and margins. So the control itself is giving you hint where the error lies. So on this aspect, give the answer to this question. If this happens, the error is with front office or back office or middle office. Then incomplete, inaccurate data flow between system. See, again, this is a disaster. Between system is these three have to work in a coordinated manner: front office, back office, and middle office. So if they are not working in coordinated manner, it's a disaster. Please understand. That is why reconciliation here becomes so important. That is why what we read up, that Back office ensures reconciliation that whatever transactions are triggered, sell transaction, buy transactions by front office. So if back office has requested, so suppose it is 1000 crore buy transaction, so whether 1000 crore has been executed or not, these reconciliations are very, very, very important. Then insufficient funds are available for settlement. Controls at Clearing Corporation of India Limited, National Electronic Fund Transfer, RTGS settlement to ensure margin fund available and timely fund settlement. So that is easy. You need to ensure that balances are properly updated, validated, checked. Then incorrect Nostro payment process. Again, it's a big disaster. Controls at Nostro reconciliations and payments have to be proper. Now you have answered, so I'm just refreshing the chat and we'll first take the answer and then we'll go to this aspect. So there are two questions I was looking at. The change of SLR, CRR, does it have impact on the banking operation? If impact, which aspect of bank? And second question was that if insufficient securities available for settlement is a risk. So front office, middle office, back office, which office has done this mistake? Just allow the chat to get refreshed. It's taking just its time. Okay. So because you answered the question and chat is refreshing itself, so let me answer the first part of the question, that is, so does it affect banking operation increase of CLR, SLR? Yes. Now when Reserve Bank of India increases that, so one of the direct impact it has, it reduces the available funds that bankers can give as advance, because that much amount they on the asset side, that much amount has to be blocked as cash or cash reserve ratio requirement that is mandated, and that much fund is to be invested in statutory defined securities which are part of SLR, so that this restricts the bank's capability of funding. The impact on the general economy is like that. These measures are used for inflation management. There is a concept of free supply of money. So because this restricts that supply, so it triggers a negativity to the process of inflation, helps control inflation. Okay, let us read. Yes. So Pooja, then Hiral, bank operation affected, yes. Loan lending, very good, Pooja. Bank operation affected, yes, yes. Then we have Atulya, yes, it affects investment and activities like this. Okay, treasury operations has lesser amount. It was reverse, Atulya. Okay. Raghavan, yes, it affects the lending capacity. Very good. Amrutpal, banking operation, lending capability. Great. Then Surbhi, yes, it lowers the credit. So banking, very good. Bank operation, yes, Hiral. Hitesh has given answer to the second question. I'll read your answer, Hitesh. Okay. Some issue with chat, it's refreshing itself and going up. Again went up. So Hitesh, so many of you have said correctly, it affects the lending operations of the bank. The available cash is reduced. Now to this question, insufficient securities available for settlement. So we have one answer by Hitesh, that is middle office. So we'll just read the functions and conclude this refreshing. So let us go above, see what operations are being done. Yes. So I think we'll take Hitesh's answer. It's middle office because they are doing the basic MIS. So that has to come from middle office. The core word that must also give us the asset liability management. So middle office is one that creates the core definition of what securities are needed. Okay, chat is back. Yes. So Surbhi has answered correctly. The bank. Kiran has also answered correctly. Amrutpal, yes. Mansha, backside operation, okay. Then Kiran is correct. Hiral, yes. So no, you have to put more than once. Don't do it. Middle office, yes. So we also correct on bank. So middle office is we'll take middle office as the core because the assessment, the all is being done at the middle office. Great. That allows us to take to the next topic, that is loans and trade finance process. This can be again a big topic. We need to save time on this. Okay, good. So I'm very happy with the answers you have given, because Treasury per se is not that you come across daily. So this interest, this idea, that is why I linked it to the inflation, so that because inflation is one thing that we look to daily. It's all like inflation today is all across the world phenomena. Okay, due to the war in Europe, a lot of things are being affected, and inflation is one thing that the whole world is trying to come above. And we just had COVID. We felt economies are going to come at normal or going up, but then this war is hitting all of us very hard. Okay, so you may not be directly impacted, but we are all indirectly impacted by the war. Okay. Now, loans and trade finance process. So let us go to the PPT. Then loan and trade finance process. So classification, process flow for fund-based, process flow for non-fund-based, risk and controls. Now, because in day one and in our MCQ, that case-based MCQ, we have done loan, fund-based and non-fund-based. So I think this is going to be good for you, interesting for you. And I'll be asking many questions on this aspect of the loan process. So let us go to the module again. Yeah. So fund and non-fund, now you understand very well. Okay. So two basic types of credit facilities, fund-based and non-fund-based. Okay. This we're talking about. Let us take the process flow. Now, what I'll be doing, I'll first go to the process flow, because flowchart is given for both of them. So we'll go to the flowchart rather than reading. Let us go to the flowchart. It's there. Yeah. Process flow for fund-based loan. First, let me bring it. Maybe because the flowchart, the table we cannot have on a single slide. So let us go to the write-up itself. Okay. We'll read and then our flowchart will be summary. So customer creation now. How does it start? So the bold one is a header. Okay. So there are steps before you come to the header itself. So first, relationship manager identifies the potential customer, approaches. Now today, banking has become a competitive business. For retail loan, vehicle loan, and all these loans, you need not go to the bank now. Bankers have their agents who make a call. Sir, यह लोन आपके लिए तैयार रखा है. Vehicle loan, education loan, home loan, personal loan. So, lot of marketing effort is there. Then, the relationship management across location identifies the potential customers and the approach, details, facilities, charges, rate of interest that is chargeable. Once the potential customer agrees to availing the facilities product, the relationship manager requests for a relevant document, that is KYC. Now see, KYC per se has become very important. KYC is know your customer. Please carry this word, know your customer. Understand that KYC today is not restricted to bank itself. KYC is mandated to any organization which is providing services. That includes, please understand, that includes chartered accountants also. So whatever clients you have as a chartered accountant, you also need to ensure you have KYC of your clients. So KYC has become a omnipresent word. Every organization that is dealing with third persons need to have KYC details for their customers. It is as simple as that. So you collect KYC documents from the customer. So here is the banker. who is proposing a facility to a customer. If customer feels that the terms, charges, interest are as per the need of the customer, they both say, okay, I'm ready. So you have to submit your KYC document. The documents received from customer are handed over to the credit team of the bank for sanctioning. Now, you probably directly don't go for sanctioning because first you want to verify the validity of the documentation. So when you say sanctioning, it includes the internal assessment of validity of the documents, the correctness of the documents, the accuracy of the document, whether the documents are fake or not. So all these validations are done, and then you come to the sanctioning part. So the document that you get from the to-be borrower are first given, and this documentation validation is done, and then you go to the credit team. So what steps credit team does? It first verifies the documents. That was first. Assesses the financial and credit worthiness. So first validation of documentation is done, then validation of information on documentation is done. This information, does this data information make the person eligible, credit worthy to avail the loan? That assessment is done. Okay. So a lot of intermediate steps are done during these processes. Then once that assessment has been done, then a sanction letter is issued. So sanction letter issue means what? That the customer's documents are correct, the information provided is correct, no integrity issues are there, the credit worthiness has been properly assessed. Now the sanction can be given. So you generate a sanction letter. Sanction letter details the terms of the facility and the credit limits of the customer. So since I have told you, sanction letter is like the religious book for that defines the relationship between the banker and the borrower. दोनों के बीच में जो संबंध है उसकी परिभाषा को देखने के लिए जो एक लेटर है, सैंक्शन लेटर, वो उन दोनों के बीच की धर्म ग्रंथ जैसा मान लिया जाए. उसमें जो लिखा है वो दोनों को उसका पालन करना है. So the borrower has to abide by the terms of the sanction letter. So when you go as an auditor, whenever we go as an auditor in a bank and audit these aspects of loans and other things, what we basically look for, the first thing we ask for is the sanction letter, because sanction letter defines everything that banker and borrower both have agreed upon. Okay, there's some issue in chat. I think that is why it's refreshing on my side also, and so it goes blank. So there's some issue coming in chat. Okay. Then once the customer agrees with the terms of sanction letter, the credit team prepares. Now this is the best location where you have pre-disbursement certificate, PDC. So what are the terms, compliances to be done, containing details of the facilities, limits to be approved for customer, send it to disbursement team. That is the team who is responsible for giving the loan to the customer. So credit team has done job, made the credit assessment, validated the document, generated the sanction letter and provided the sanction letter to whom? The disbursement team. Then now you give money to the customer. The disbursement team verifies the post pre-disbursement certificate and creates customer account and master in loan disbursement system. So there are terms based on which the pre-disbursement certificates is generated. The disbursement team assigns the limits of various products as per pre-disbursement certificate. Now, just as an example, bringing this issue to you, so I'm asking this question. Okay, the disbursement team verifies the pre-disbursement certificate. What all is mentioned in pre-disbursement certificate? The details of the loan, the facilities. Okay, now my question is that we have talked about configuration, master, transaction. We have talked about configuration, master, transaction. This point number 7, which says that updates will be done in system. So these updates will be done at configuration level, master level, or transaction level. Point number 7 says that based on pre-disbursement certificate, updation will be done in system. So this system update will be at configuration level or master level or transaction level. Just try to answer that. Okay. Once limits are assigned, the customer can avail any of the facilities up to the assigned credit limit. So once your sanction is there, it has been updated in system, customer has complied with the terms of sanction, all valid documents are provided. Few documents, sanction generally all documents are collected. Sometimes it happens that like customer has a current account in a second bank. So what the banker says that because now you're having some facility with us, A bank, and customer already has a current account with B bank. So A bank tells to the customer that we are sanctioning you this amount with a condition that you are going to close your current account with the B bank within 90 days of your sanction. So there are few terms which need to be complied post-sanction disbursement also. So those also need to be kept track of. That is what exactly auditors are into. Okay. So after point number 8, you can always add this point number 9, that there are some terms and conditions which need to be complied post-sanction. Say closure of another current account in a different bank. So because see, suppose I am a borrower, I go to A bank, I get a facility with A bank, and I already have, because I'm already doing some business, so I have a current account with B bank. Now, it cannot happen that I have a current account with the B bank. Today, A bank gives me a new loan, new sanction, and today itself I have to close my bank account with B bank. It is just not possible because it's a time-drawn process. I already have my bank account shared with my customers and with my vendors. So I cannot close it like tomorrow. So banker realize that it's a business transaction. You cannot cut it like this. So they give a 90-day, 30-day period that within that period you close your that current account. So 9th condition you can add that there are terms which the borrower need to comply with post-sanction also. Those terms also need to be complied with because sanction is what carries all value to this transaction. So we have talked about this first part. Then loan disbursal, facility utilization, and income accounting. Now once disbursement has been done, the second part. Customer approaches the bank. As per sanction you get. The facility requested are offered to customer after verifying customer limits in loan disbursement system. Say for example, it's a cash credit limit and banker says that whatever stock customer has, 25% margin will be deducted. So customer submits everything is there. The system has been updated. You are answering the question that system update will be in configuration, master or transaction. So system update is there. Everything is there. Now customer goes, now please give me the amount. So the banker says, please produce the stock statement. There is a condition, margin condition of 25%. So whatever stock statement customer submits, 25% is deducted and then the balance is disbursed. Okay, good. So now you have questions and answers. So I will complete this aspect and then come to your question and answer. So in case of fund-based loan, term loan, overdraft, cash credit, the funds are disbursed to customer's bank account and corresponding asset is recorded in loan account. So that is there. It's basically how you go through the transaction. In case of bill discounting, customer is credited the invoice amount excluding the interest as per agreed terms. Bill discounting is customer has a receivable that customer gets discounted at an agreed rate. In case of non-fund based facility, the facilities are granted to customer up to the assigned limit. We have taken this example practically, letter of credit. Okay, so that is non-fund based limits. Then they give summary of credit and non-credit facility. You can go through. So this table I will not be reading. The nature of facility and nature of income it generates. Then this fund process flow we have gone through. So we just, I'll go to the queries, then I'll come to this. No. Okay. So let me first guess the answer to my question. So when the pre-disbursement certificate is generated, so the disbursement department of the bank is going to update the master. So Hitesh, it is master. Mansha is correct. That is, you update that in master level. Then Ayush has put a good question that whatever facility that the banker gives, is it payable on demand? No, no. That was not the intent, not the meaning of it. Whatever facility banker gives, so it's a period drawn on that. So that idea that it's payable on demand is not there. It is basically part of a business cycle. If you have something more to ask, please ask. Okay. So you update the master level, and based on that, all things are done. Now the process flow of fund-based loans, we just go through. So customer relationship. So disbursement team, loan booking system. Then here it is master. So Manisha's answer, it's there that you update the master. Then debit credit, that is the accounting aspect that you can learn. Okay. So debit the customer account, credit the income account, like that. Loan booking system, subledger, and financial statement. So this is how this whole transaction flows. Process flow for fund-based loans. Then process flow for non-fund, that is letter of credit and letter of guarantee, or you may say bank guarantee. So pre-disbursement certificate generated, loan booking system, client master, request letter, loan booking system. So in non-fund based limit, what the banker is basically earning the initial interest commission. Okay, commission. So customer account is debited for this, income account is credited for this. And banker has to show it as a contingent liability, because if customer defaults, then banker may have to pay. So that is how this looks like. Process flow for non-fund based limit. Again, we are going to talk a lot on this. Very important discussion, because this is the core. See, if you look to a bank balance sheet, on the asset side, more than 70% of the asset is this aspect only. So we need to be very, that is, you go by this concept of materiality, substantiveness. So it's the substantial part of banking operation. You must do it very thoroughly. And then you being practicing chartered accountant one day. So this is one of the things that you must look at in this manner. First, credit line setup is unauthorized and not in line with bank's policy. So credit line setup. Now see, please understand. Let us read, then we'll talk more on this. The credit committee checks the financial ratios, the credit team, the net worth of the borrower, to be borrower, the risk factor, its corresponding mitigating factors, the credit line offered, the credit amount, etc. It has to be as per the credit risk policy. That client can be given the credit line. Now, the first here is basically talking about that banker, when an assessment of credit worthiness of customer is done, that assessment has to be done thoroughly, correctly. That assessment is done by what? A credit committee. Credit committee's assessment has to be very well done. So that there has to be something, you may say, a review process of the credit assessment done by the credit committee. Mistake can be done by the credit committee also. So when you read the first risk, it is about that credit committee has inadvertently assessed it incorrectly. It can be due to wrong data, anything, but that assessment is incorrect. That's first. Second, credit line setup is unauthorized and not in line with bank's policy. Now, if you read first and second, they are exactly same, but the level of risk is materially different. Please understand, when you read second, the flow is that the credit committee has made the assessment correctly. The assessment has been properly incorporated in system. Just take an example that the drawing par means the amount that a borrower can withdraw in a cash credit loan. So generally drawing par is calculated like this. If your stock is 100, 25% is margin, 75 is allowed to the customer to draw. Now suppose a person, a staff of the bank, a person who wants to commit fraud, the borrower itself in collusion with a bank person, what they do in the system, they go and change the margin money condition from 25% to 10%. What does it mean? It basically means that against a stock of 100, as per the terms and sanction and policy of the bank, borrower could withdraw only 75, but because an unauthorized change has been made in the system where the margin that was 25% has been reduced to 10%, so now borrower can withdraw 90. This is the second line. Now let us read the control. Access right to authorized credit line limit in loan booking system should be restricted to authorized personnel. So there is a sharp difference between first risk and second risk. First risk arises where the credit assessment is incorrect. Second risk arises where credit assessment is correct, but someone unauthorizedly enters into system and modifies a parameter. Very, very important. So just to ensure that you remember it correctly. So that is the difference between the first and the second one. Then, masters defined for customer are not in accordance with our pre-disbursement side. That's a different aspect. In fact, just sharing, some time back, we did exactly this audit for a bank where we had to assess that the assignment was this only what you're reading. There are sanction letters provided to us and master data provided to us. We had to check whether the sanction has been properly incorporated in the master. Exactly same. Being online, not many errors I could love to have shared to you, but that is a separate audit, please understand. So I've told you chapter 3 and 5 create a lot of opportunities for all of you as young chartered accountants. Okay. So access rights to authorized customer master in loan booking system CBS should be restricted. That we agree. SOD must be there. Segregation of duty in loan disbursement system. The system restricts the maker having checker rights. So the person who updates limits are cash credit loan, term loan. Non-fund based limits are letter of credit, letter of guarantee. So let us take example to clear the issue that you have in mind. See, cash credit loan is a facility that is for continuation of business. So you are buying the product, selling the product, generating profit from the product. So when you buy a product or buy raw materials, you create inventory of raw material. Then you manufacture, create inventory of finished goods. Then when you sell, you create inventory of debtors. So cash credit limit is given on security of inventory that includes raw material, that includes finished goods, that includes debtors. Okay. So bankers gives margin that whatever your raw material and finished goods are there, we will give 25% margin on that. On debtors, the margin is 40%. Why the margin is higher on debtors? Because when you sell, there is a profit element built into your selling price. So that additional margin is basically to make good the profit element and a general understanding. So for raw material finished goods inventory, the margin is 25%. For debtors, the margin is 40%. Now, when I say cash credit loan, what it basically means that it's for continuing nature of business. So I'm not doing, because I cannot cut my business like this. I cannot close the next day. So it's an ongoing facility. As a borrower for cash credit, I have to renew it on a year-on-year basis. So that is one. Term loan. When I buy a term loan, so bank has this concept of EMI, equated monthly installment. So when I have this equated monthly installment, that means my term loan has to be repaid over a period of time. That may be 10 years, 15 years, 5 years, as the case may. Come to non-fund based, say letter of credit. What is the terms of letter of credit? Suppose I am the buyer and you are the seller. So I get a letter of credit issued from my banker to your banker. It says that me as a buyer is going to make payment within 6 months. I have to pay that amount to you as a seller of the product within 6 months. If I don't pay, then what happens? My letter of credit devolves, means my banker has to make payment to your banker. So my letter of credit limit that was non-fund based has become fund based. So this limit also there is a period over which I have to make it good. So there is no like demand. Concept of demand doesn't exist. It's a part of business transaction. Okay. So risk control in loans and advance processes. Next. So we talked about this classification, fund-based, non-fund-based. So I think this whole idea has to be clear to all of us, how these facilities are processed. Now, basically what you're looking for us from, not from the business perspective, but from the banking perspective, that how these facilities are going to be regulated in their core banking system. That is how you look to these facilities. Process flow we have talked about. This is very, very important. So we have before with this, we are first only going to discuss the header. The main content in the module is very, very, very less. Okay, but then we need to learn a lot. I personally feel that this one topic is already part of your bank audit. You have been reading about this Basal 3. So in our discussion also we talked about the idea about Basal itself. Okay. Now, so reporting system, MIS, data, lot of questions I'll ask you. Okay. So I'll be using many words. So we talked about STR, suspicious transaction report. We talked about CTR, cash transaction report. Then a word came ALM, asset liability management. Then we talked about SLR. We talked about CRR. We talked about exception reporting. Now these 6 words, so we'll be talking about these 6 words. Then another we need to add this risk adjusted capital adequacy norm. So another word added to this. So what are these words? What these words denote? So please understand, these words have lot of criticality to banking operation. Now I am sharing something only for its understanding's sake. Some time back, while doing a very specialized audit, you can say system audit, what we found that in a bank's core banking system, was quite back, a cooperative bank's core banking system did not have a module which will generate all these. What? Cash requirement ratio details, statutory liquidity ratio details, asset liability management details. Now, what it means? What this basically means that if these reports are not generated from banking system, the board of directors or the governing body of the bank, how it is going to regulate, run the bank. So to have this comprehensive scenario of the risk a bank has and how that risk has to be compensated, how the risk has to be calculated, what positive action bankers have to take to make good that risk. Worldwide, the central bankers started meeting at a city that we've talked about, Basel in Switzerland. There they all central bankers of the world. Central Bank of India is Reserve Bank of India. So governor of our Reserve Bank of India, they will have an annual conference at that location, and there will be a lot of discussion being done on how the banking is going, how the world economy is working, what are the risk parameters to the world economy, what is the growth projection of the world, how GDP is being taken care of. So all these parameters are discussed. And these central bankers issue norms which are called as Basel norm. That they have a committee that is called as Basel Committee on Banking Supervision. In fact, they've created an acronym for that, BCBS, Basel Committee on Banking Supervision. So they issue these norms. They started with Basel 1, Basel 2, and now we are in category of Basel 3. What these norms are about? They are very detailed, from macro to micro, everything is there in these norms. What is the core concept behind these norms? So what I'll be basically doing, we'll be learning the background of the norms, and then we'll try to see how this is linked to today's technology parameter. Very, very important. This is what I wanted, more addition from whatever is there in the module itself. So what Basel norms talk about? Basel norm basically talk about the risk bank has. So what risk bank has? So we have talked about those risks. In the previous discussion, we talked about operational risk, credit risk, market risk, investment risk, then interest rate risk, currency risk. So these are various risks that bankers has to face. So how does banker identify the risk parameter? So how you go about? You first identify the risk, you assess the risk, value the risk, and then have a risk mitigation. How you are going to mitigate that risk? That is exactly what this committee on Basel Committee on Banking Supervision does. It does this identification. Now today, when you have to identify what you are identifying, now let us read those 6 words. What you are basically looking for: what is the status of SLR now? Reserve Bank of India has increased. So you must know what is your SLR investment today, then CRR investment today, CRR holding today, then what is your capital, risk adjusted capital asset value, what is your tier 1 capital, tier 2 capital, tier 3 capital, what is the value of your subordinated debt. These words you have read in banking. I am not talking anything outside. Then what is your suspicious transactions, cash transactions. So all these reports are generated through system. What Basel Committee on Banking Supervision wants banks to have robust system that reports these critical risk management parameters. And one of the most important risk management parameter within this is ALM, asset liability management. Now what I want you to try to answer this word. Asset liability management report is generated. Try to write in 2 lines, 3 lines. What exactly is asset liability management? What it indicates? The summary of asset liability management as a concept, as a report, as a reporting format. What it tells about the bank. Just put your heart, mind into it. Now when this whole risk assessment is being done, what is the core requirement? The requirement is that banker must have information, banker must have data about this risk parameters. Now where this data is going to come from? This data is going to come from the core banking system. So core banking system has data. It has to collate, collect, interpret, analyze data and generate these reports, which are going to be used by the top management of the bank for compliance with Basel norms, for taking positive action on if there is something that is going critical, haywire, not as per the desired parameter. So what is happened? Now see, 2 or 3 things have merged. You have core banking system, you have Basel Committee on Banking Norms, Banking Supervision, which give guidelines that these are the value parameters banker needs to meet. Whatever value parameters they give for risk adjusted asset, tier 1 capital, tier 2 capital, ALM as a concept, these value parameters have to be configured in banker's core banking system. And this core banking system must have capability of reporting, generating those reports, which talk about Basel compliances, so that if there is a non-compliance, banker can take action on that. How that report is going to be generated is the header of the slide. We have only read the header. What is the header? Let me read. Header is reporting system, MIS, data analytics, business intelligence of core banking system to generate, let us continue, Basel 3 reports. That is exactly this topic about. What this topic is about, how banking system is going to generate these reports so that management can take positive action on this. This is what you are looking at. Let us read. So Basel 3 is a comprehensive set of reform measures developed by BCBS to strengthen the regulation, supervision, risk management of the banking sector. These aim to improve banking sector's ability to absorb shocks arising out of financial, economic stress whatever the source and improve the risk management and governance. In fact, because of this Basel and due to COVID, Corona, lockdown, and across the world economy, everyone was in trouble. So BCBS, the Basel Committee on Banking Supervision, has given some more time to banks across the world to comply with this Basel III regulatory norms. So that leeway has been provided. One of the core dimensions of Basel III is capital adequacy based on risk assessment. Then it has 3 pillars. Just remember, this I have added. You must have read in the other module. I have added something more from what there is in the module. Basel III has 3 pillars: market discipline, supervisory review process, and minimum capital requirement. All this requires a lot of data analysis and projections to be done. This cannot be simulated through normal mathematical models, but require use of AI, artificial intelligence tools. So to this compliance becomes very, very, very important. So before we go to this topic will start after the break, but we are not breaking right now. I've got queries to answer. Okay. So that pre-disbursement certificate, the basic configuration will be at master level. Then I have answered Ayush's question. Hiral. Okay, Hiral, thank you. It is part of your accounts chapter also. Very good. You have calculating capital adequacy. That means you know it. Great. ALM manages financial risk. Mansha. Pooja says assets held by a bank, liability. Okay. So assets are greater than liability. Okay. I request you to please read on asset liability management. Let me give a very practical example. I want you to get into the concept. This is a phenomenal concept to understand. What is asset of a bank? Advance. What is liability of a bank? Deposit. Suppose I am a customer of the bank. I go to the bank. I deposit 5 lakh rupees in the bank for 5 years. I made a term deposit. 5 lakh rupees for 5 years. Now bank has 5 lakh rupees cash. It gives a home loan to a person. Home loan tenor is what? Generally 10 years, 15 years. So suppose bank has given a loan to a person for 15 years. So 5 lakh rupees is available with the cash. You reduce SLR, CRR, not all things can be given in advance. So bank has given say 16 lakh rupees for a tenor of 15 years to a person housing loan. Now, what is the issue? What will happen? The person to whom bank has given advance is going to repay after the full payment will come after 15 years. There will be EMI, but for a 4 lakh rupees loan, the EMI will be say for 15 years, some 2,000, 4,000 rupees month. So by the end of 5th year, banker will not be able to generate 5 lakh to repay to the person who has given his deposit, because this person I have deposited FD of 5 lakh rupees. I will go to the bank, take back my FD. Now this will create what we call as asset liability mismatch. What is asset liability mismatch? The maturity pattern of asset have to be matched to the maturity pattern of liability. In the example I have shared, my bank's liability is maturing in 5th year, but asset is maturing in 15 years. There is a 10-year time gap. This is what is asset liability management. It's a phenomenal concept. So just for one line definition, I think it must be part of your some accounts or audit paper. Just read that. Asset liability match, as a layman, as a simple definition will be matching the maturity pattern of asset to the maturity pattern of liability. Imagine bank has thousands and lakhs of types of advances. So all that data has to be collated in system. Banks have thousands and lakhs and crores type of deposits. So that maturity pattern has to be collated and then they have to be matched. This is what is ALM, asset liability, a big issue. So all this requirement, all this reporting has to come from MI. So I personally feel lot has to be written in main topic 5. I've tried to create that idea that what exactly when you talk about reporting system. So it's, yes, it is used for managing financial risk, Kiran. Good. But I wanted the core definition, what it exactly tells about. So it is now 17:18. So let us have a 10 minutes break. We are having a break, 10 minutes. We'll meet at 17:28. break. Okay, students, welcome after this important break. So let us continue where we left. So we want to talk about applicable regulatory and compliance requirement, but before that, there may be a query. So let us view your query. Okay. Okay, so some more inputs on this ALM. Yeah, Hitesh. So I want just improvement in what definition you have given, Hitesh. ALM tells about the liabilities bank has to pay and assets. There is a timing factor also. So what you are in your definition, you have to multiply it by timing. What is the liability when it has to be paid? What is the asset when it will be realized? The gap between those two has to be analyzed. Then Manisha said the debtor turnover ratio should be greater than no. It's a different parameter. Okay, that doesn't get directly into that. Okay. So that is the points you have made. So it's a good discussion. The understanding has to be there for all of us. So it's good, great. Let us continue. Now, so it's say 7:30. By 8, between 8 and 8:15, you put all your queries. Okay. So then we'll find time to answer all queries relating to this subject chapter. Now, very important topic, applicable regulatory and compliance requirement. So there are laws, there are concepts. I'll be bringing some live cases to you, allowing you to learn and answer. Then our case study based MCQ was basically today on this only, applicable regulatory and compliance requirement. That also we are going to solve today. First is very important, impact of technology in banking, money laundering, we have a detailed discussion. The idea cyber crimes and banking regulation act. Now see what has happened. Technology has affected. So we'll try to create some live examples for understanding. Okay. So technology has affected the policies, procedures, the related regulatory structure within core banking system, the organization structure of the entity itself, the business process. Now, because all these changes are being done through technology, you require controls to ensure that nothing is missed out. Just for the sake of it, I'm creating a very simple example to highlight the impact technology is having. Okay. I understand none of you have experienced manual accounting. When I started my articleship in 1993. So when I started, I did 4 years articleship. That was a phenomenal job done. There's a very good story behind that 4 years articleship, but being online, not all things can be shared like that. So when I started my articleship, the office I started my articleship, the CA firm, so they had clients then who were maintaining their books of accounts manually. Now, when you maintain books of accounts manually, so there is a cash voucher. That cash voucher is posted to cash book, physical cash book. From that physical cash book, it is posted to ledger. So we read in our studies also that the cashier means the one who is creating a cash book and the cash voucher, he, and the ledger writer must be different person. Yes, because if cashier and ledger writer are same person, the chances of fraud is very high. Because what is going to happen? Suppose the company has received cash from Mr. A. So the account, the same amount has been put in cash book on the receipt side. Now when it is physically posted to ledger, so it must be credited to Mr. A's account. If cashier is ledger writer, what mistake may happen? The cashier may post it in Mr. B's account. And then when Mr. B pays, so it is credited to C's account. So this was a accounting fraud that probably you must have read called as steaming and leading. The possibility of that fraud is very high when cashier is ledger writer. 30 years back, exactly 30 years back. Today, now because we have online accounting system, just take Tally as an example. Tally, when you enter a cash voucher, there is no chance of segregating a cashier from ledger writer. As soon as you post the cash voucher, it is updated to the respective ledger also. In fact, the impact goes to the balance sheet P&L also. So that means as technology has got into system, the nature of processes have changed. Because the nature of processes have changed, the necessity for controls have to change. The processes changes, the organizational structure changes. So all this is being impacted by technology. That is a huge impact that is being there in banking sector, because today all banking, all banks, whatever size you imagine, they all have to use core banking system. The name of your chapter 5, small bank, large bank, there are core banking system for small bank, core banking system for cooperative bank, core banking system for private sector bank, core banking system for public sector bank, but all use technology. So the impact of technology is huge. This is just very simple example I have given, that because technology has there, the desired segregation of duty between, say, cashier and ledger writer, you cannot have. It's a huge impact. So when technology is changing the policies, the procedure, the organizational structure, the business processes, controls have to be built. And see, regulatory structure means whatever law is there, it has to be put in system. So like GST, TDS, all compliances to be done, it has to be brought into technology. There is no concept of manual compliance that can be put in there. So this is the impact that technology is having in all the processes. And because our chapter is chapter 5, core banking system, we are discussing in terms of bank itself. Today, bank account opening, when we started the lecture, I asked you that when you open a bank account, so you said we go to the bank, give this. Today in the same discussion, someone of you did answer, sir, now you can open a bank account online. You need not go to bank physically. That means what? Banks have to evolve. They have to create a separate, what you call as SOP, standard operating procedure for opening of a bank account. How the KYC will be validated. System integrations are there. All this is due to impact of technology in banking sector. So that is huge. Now, we want to take this from module itself. Let us go to the module. So there is only on this business intelligence analytics. This chapter is only one para, but it's given that you have read a lot in chapter 2. So please take help from chapter 2 also. Then Hiral, yes, separation of cash receipt, CAT defalcation includes. Yes. So these 4 aspects are being affected by technology. The effect is phenomenal. Today I have talked about when we started this chapter 5 that in my own city we have a kiosk banking. We have a 100% automated bank branch where not a single human being is there inside that bank branch. Only a security guard sits outside. The bank has installed 4 machines, a ATM machine, a cash deposit machine, a passbook printing machine, and a check accepting machine. These 4 machines take care of 90% of the daily transaction of the bank. Job is done. So that is how technology is doing so much impact on the way banks are working. Then I have shared you another revolution that is already triggered, that is the banking correspondent. All our postmen and postwomen are designated BCs, banking correspondents. So they have that point of sale terminal, travel to the rural village, allow the person to withdraw money by a thumb impression or a validation through card on that point of sale terminal machine. So everything is getting automated and it is increasing day by day. So I did ask you a question that so much automation is going, it is going to have deep impact on auditing process. And one of the standards that is most affected by this process is SA230 documentation. So that is the impact technology is having on businesses and then the related impact on our profession as auditors. That is the impact of technology. Everything is technology driven. We have, just to conclude this discussion, we have talked about the level of integration of bank to technology is so high that if technology is not there, bank stops working. Network not there, branch is off. Say some 2005, there was huge flooding in Mumbai. So all bank server went down. The banks across all India went down. So that is the integration of technology today with banking operation. Okay. Next is very, very, very important topic. Again, it applies to all aspects. Means you will find this topic in multiple locations. Most why it is being taught about in this chapter, because for money laundering, bank is one of the channels that is misused by the fraud creators or money launderers, if you want to call them. So that is why this is being talked about, and Government of India, Reserve Bank of India, and all our enforcing agencies are keeping huge track on this money laundering activity, because it at a level it has been found that it is used for terror financing. So it hits on the sovereignty of the state. So across the world, there is a huge effort on money laundering. Before we go on the discussion beyond, there is a worldwide organization on this terror financing. They call it FAFT, which identifies terrorist organization, identifies countries, validates countries' banking norms, whether those norms are in such manner as to identify terror financing, keep a track of those people, bring those people to books. So huge effort across the world is there on this aspect of money laundering, because over a period of time people realize that this activity goes beyond normal banking frauds and affects the sovereignty, security, public decency of the state. So let us read about it. It's a big topic. Money laundering is a process by which proceeds of crime and true ownership of these proceeds are concealed and made opaque so that proceeds appear to come from legitimate source. So what exactly is money laundering? So making definition as simple as possible, there is a source of black money. Now this black money can be generated through drug trafficking, this can be generated through illegal sale of rare earth metals, this can be generated through dacoity, this can be generated through undeclared source of income, that is black money. So money laundering is the whole process through which this illegal black money is converted into white money and integrated into the financial system of the country, integrated into the core financial system. So now money laundering per se is not being looked at only country level. I've talked about this organization FAFT that keeps track of money laundering activities across the world. India is also a member to that. So globally, information sharing is there on money laundering activity. That is very, very important. The objective in money laundering is to conceal existence, illegal source, or illegal application of income to make it appear legitimate. So what is the core? Core is that whatever is this illegal source of money, the way it is presented, used, shown to public is to make it appear as legal. That is. It is commonly used by criminals to make dirty money appear as legal money. So that is the money laundering. Now there are stages. So we'll take stages one by one. The first stage involves placement of proceeds derived from illegal activities, the movement of proceeds, frequently the currency, from the scene of the crime to a place or into a form that is less suspicious and more convenient for criminal to carry. In this stage, illegal funds or assets are first brought into financial state. So this dirty money is brought into the banking system, first stage, to make it appear as legal. We'll come to the flowchart as we read the definition. Layering involves separation of proceeds from illegal source using complex transactions designed to obscure the audit trail. Now, see, audit trail here comes in a different connotation and denotation. With audit trail, we talked about which links to the object to the source, the trail of the transaction. Exactly that is being done here, that this illegal money which has been kept in this bank, so hundreds and thousands and tens of shell companies are created. Shell means which are bare shell, there is no business transaction in them. The shell companies are created only to reroute the transaction so that it travels so fast between the shell companies that the authorities who are searching for the source themselves can confuse that where it is coming from, where it is going. Is this a legal company or illegal company? That is layering. Layering involves sending money through various financial transactions to change its forms and make it difficult to form. So cash can be converted into different forms. Layering is done. Layering is like putting paste over dirty money so it appears as a genuine money. Layering may consist several bank-to-bank transactions or wire transfers between different accounts in different name in different countries, making deposits withdrawal to continually vary the amount of money in accounts, changing the money's currency, purchasing high-value items to change the form of. So you start with rupee, convert it into dollars, then into euro, then to pound. So for conversion, the whole money travels across the globe and then re-enters India. It will tell how it is reintegrated into the system. That is how this whole transaction flow goes. Integration involves conversion of illegal money proceeds into apparently legitimate business earning through normal financial or commercial operation. Integration creates illusion of a legitimate source for criminally derived funds and involves techniques as numerous and creative. For example, false invoice for goods exported. So you create a false invoice, goods are not exported. And because you have created a false invoice, the money is in some dollar or euro denominated account in some foreign bank in some foreign country. So against that export invoice, which is actually not there, you receive that money as a genuine proceeds for the export made. 100% it has been converted into real money, legitimate money. Domestic loan against foreign deposit. Purchasing of property and commingling of money in bank account. So bringing them together. So layering and then finally integrating. So what this ensures? This ensures that the visibility of the dirty money becomes real, legitimate. So that the dirty money is so placed, layered and integrated. Then when you look at it, you feel, oh, it's so genuine transaction like that. So much effort is done and it's a across the world phenomenon. It's not a country specific issue. I've told you world bodies all across are trying to find ways and means to keep a track of it. Now, what is happening? Anti-money laundering using technology. So, see what has happened now. Please understand. So, what you have learned is money laundering. Now, because the global financial systems are so integrated, there are two aspects. There is a negative aspect to this integration, that the criminals are able to transfer money so fast from one account to another account because it's so integrated, so technology driven. So that is the negative aspect. The positive aspect is because now it is technology driven, authorities and the governments tracking, the enforcement authorities across the world tracking this, they also have a ease of convenience of telling each other this is flowing. But then the fraudster is generally a step ahead of the authorities. So that misuse is huge of technology in this money laundering business. Anti-money laundering using technology. So negative publicity, damage to reputation, loss of goodwill, legal and regulatory sanction, and adverse effect on bottom line, all are possible consequences of banks' failure to manage risk of money laundering. See, I've shared you two specific exception reports. Please note it here itself. CTR and STR, cash transaction report and suspicious transaction report. Reserve Bank of India and the regulatory agencies require banks to identify suspicious account. There is a list, not in our course, list of accounts which may be classified as suspicious. So if any transaction occurs in those suspicious accounts, they have to be directly reported to authorities, to Reserve Bank. There's a cash transaction limit, a specified value. If monthly cash transaction cross that limit, that cash transaction report is mandatorily sent to Reserve Bank, to income tax, and in exception to authorities also, enforcing authorities, regulatory agencies. So what is being done? Core banking system, through this tracking mechanism, all these reports are generated and sent. Now, what is the issue? Issue is that suppose I am a bank, and through use of me as a banker, the money launderers or criminals are able to do a transaction. Say 100 crores, 1000 crore rupee transaction has been done where I was the bank. It hits me negatively. The best example is Punjab National Bank Nirav Modi case. The fraud itself, the modus operandi of the fraud, it triggered so much negative publicity for the bank involved. So it was like a wake-up call to other banks that this is the risk if you don't create controls properly. So very, very strict action is taken by regulators if these money laundering provisions are not complied with by banks. I'll just read that line. With regulators adopting stricter regulation on bank and enhancing their enforcement efforts, banks are using special fraud and risk management software to prevent and integrate this as a part of their internal process, daily processing and reporting. So banks have brought that level of awareness. Very, very important. Then the other issue is that this is used for financing terrorism. Money to fund terrorist activities move through global financial systems via wire transfer in out persons. The money can lie in accounts of illegitimate charities and can be laundered through buying and selling securities. So it's a huge thing that is going on. That is why world over, authorities are putting lot of effort on identifying these transactions. We have a special law, that is Prevention of Money Laundering Act. All CBS software should include various type of reports which are generated periodically for filing with regulatory agencies. So please mention those at least two reports you can mention here: CTR and STR, cash transaction report and suspicious transaction reports. They are generated, so that means that configuration has to be there in core banking system. If that configuration is not there in core banking system, it will be a problem. So we talked about that. Then cyber crime. Now, before we are changing the topic, there are a few questions. Let me answer that. Yeah, Amritpal, bank may define it as business correspondent if he or she is doing the same job. So, if they are doing the same job, you call them by whatever name. So, I'll agree. Okay. Then cyber crimes. I got your query, Pooja and Hiral. I'll come to that here. Now, it's a big issue. Please understand, I've been talking to you. Now, what we will do, we'll add some value to this discussion. We'll learn something more in addition to what is given. Cybercrime are also known as computer crime that involve use of computer in a network. The computer may be used in committing a crime or it may be target. Cybercrime is defined as offenses that are committed against individual or group of individuals with a criminal motive to intentionally harm the reputation of the victim or cause physical or mental harm or loss to victim directly, indirectly, using modern telecommunication networks such as chat room, emails, notice board, groups, and mobile phone. Now see what has happened today, that all across the world, cyber crimes have multiplied like anything, and this period of COVID has enhanced that cybercrime like huge. Now, so any crime that is done through this technology will fall in the category of cybercrime. So I'm just sharing that few things that we must always adhere to save ourselves. So always make payment through secure website. Never click on link that you don't know about. Never share your debit card, credit card, internet passwords. Always use virtual keyboard to make payments. So these are few things we must always adhere to save ourselves from the risk of cybercrime. The trouble is that our usage of technology is so high. These mistakes, when we do, we fail to recall that we did a mistake, and when then we are hit by a cybercrime, we start complaining, I did not do anything wrong, why I have been hit. Believe me, a hacker is able to hack in your system only because you left some loophole into that you did inadvertently, or a technology solution, a security that you must have created, you failed to do it. So that these are the core reasons why we all are hit by cyber crimes. Okay. So let me go to the module to read what it says on cybercrime. So cybercrime is also known as computer crime that involves use of computer and a network. The computer may be used for committing a crime or maybe target. Okay. Then there is a UN manual. So this is important. What you can do from the Information Technology 2000, you can write the sections. This exercise you do on your own. This crime, which section it is covered in Information Technology Act. Committing of a fraud by manipulation of input, output, or throughput of a computer-based system. Computer forgery, which involves changing images or data stored in computer. Deliberate damage caused to computer data programs through virus programs or logic bombs. Unauthorized access to computer by hacking into system or stealing of passwords. Unauthorized reproduction of computer programs or software piracy. Cybercrimes have grown big. Yes, believe me, cybercrime is a multi-billion-dollar business per annum. Cyber criminals are earning billions of dollars on an annual basis, and they have become like so strong. I don't know whether you know it. Within previous 6 months, 2 big companies across the world were hit by something called as ransomware, and one of the company paid some millions of dollars to the hackers to get their system out of that security capture that the ransomware had done. So the cyber criminals are becoming stronger day by day. We must have some mechanism to keep a track of them. And banking sector is prone to the most risk. In fact, I shared few frauds you need to read about. One fraud that I recall again, Cosmos Bank fraud. Please read about the fraud. It was pure technology-driven fraud. Read that. We learn many things from that fraud itself. Huge. Then coming to the next, that is Banking Regulation Act. So the regulations, the rules. Let us see your queries. Just give me a second. Refresh. Yes. So Hiral Puja, commingling is bringing too many things together, like joining. So multiple transactions being commingling, bringing many things together. Like, so when you do it, what happens? Separation becomes a problem. You are not able to separate, not do it separately like that. Then section 43A, capital A, Puja. Okay, I'll come to that. It's there. It is going to come. So, okay, you're answering the sections. Okay, I want it. Great, great. Very good. So 66 is good. 43A is also correct. 65 you read. That is also correct. Okay. Then flow chart. Okay. So let us go there. Up. So dirty money, put into bank, placement. So bank is a legitimate source. Now you layer. So layering is this. Multiple transfers. So India to a country outside India, say somewhere, you open a dollar account. Then from dollar account you give a loan, then false payment. So they've given an example that how this money has been routed. There are thousands of ways of routing what money launderers are doing. So this is what is called as layering. And once you have layered it enough, you buy these luxury yachts, jets. So it appears as an absolutely perfect transaction. That's okay. So Rafiq Bhai Menon, there is only one way of revising is enjoying. So I've told you, start reading 15 days, 30 minutes or 1 hour daily this subject. So you start enjoying it. You start enjoying, revision will be there. That what I know personally is that beyond this class, the next time you are going to read about the subject is just 15 days before your examination. So हिंदी में बोलते हैं ना सौतेला व्यवहार करते हैं अपन. So you, because we all give step motherly treatment to this subject, so that is how you get the marks. So you start enjoying it, then you get good marks. Offshore bank is bank outside India. Okay. So let us go to the slide, see where we are in the slide. So all we are going to read from the module itself. Great. So now the time is 8. So you can put all your queries for all chapters. Now see, banking regulation is the core act that regulates the banks. Within that, you have Negotiable Instrument Act, Now, it's an old act, but now as technology is evolved, so a lot of critical changes uh, have been made in Negotiable Instrument Act to make it in line with technology. Like 18s, that the whole computer was not in existence, but now you have NEFT, RTGS. So all these are basically triggered through the amendments, updates made in Information Technology Act, which has been forced into Negotiable Instrument Act. So just have a reading of this, very, very important. Then concept of digital signatures, electronic signatures, Section 3, Section 3A of Information Technology Act, which create digital and electronic signatures, have been forced into Negotiable Instrument Act. Then Reserve Bank of India Act 1935. So this act is again very important, applicable from first. So RBI came into existence on 1st April 1935. RBI is what? Is the monetary authority that regulates all banks in India, formulates, implements, monitors the policy with objective of maintaining price stability and ensuring adequate flow of credit, regulator and supervisor of the financial system. So it brings the guidelines. We've been talking about RBI. We have been mentioning RBI's SLR requirements, CRR requirement, STR, CTR, ALM. So all these concepts, Basal norms creation. So Reserve Bank of India is our regulator. It creates the parameter, compliances, gives the guidelines, and it is also the issuer of currency in the country. Then this is important. So few sections are given. So I request all of you to read these sections, offense of the sections, because these are full acts. Few important sections have been shared with you. So you just read those. Offense of money laundering. So whomsoever directly, indirectly attempts to indulge or knowingly assist or knowingly is party or is actually involved in any process or activity connected with proceeds of crime, including concealment, possession, acquisition, use, and projecting or claiming that it is untainted property shall be guilty of offense. So, of money laundering. So it's a broad definition. It covers all chain in a process of money laundering. Bankers are also covered. Then Section 12 is important. That is applicable to banking companies. So reporting entities to maintain records. So it's a detailed section. Reporting means applicable to banking company, financial institution, and intermediaries. So they have to maintain records so that if a money laundering activity is identified some year back, so that report can be analyzed and tracking can be done. Just go through this, read through these. Then power of director, that is defined authority in the Money Laundering Act. So fines can be imposed. Please read this section, important. And I request you to read the definition. Accountant here includes chartered accountant, means chartered accountant. So CAs are also covered. Then punishment for giving false information within Money Laundering Act, subject to a huge penalty and imprisonment also. So read them. So for these sections, please keep a track of the monetary penalty as well as the prosecution period, the jail period. Offenses by companies, directors will be involved, directors will be held liable. Then next is Information Technology. Now see, this section is very, very important. 43A7 did talk about. So there are a number of sections I want you to remember. Few will be in the module. If not there, then I'll share with you separately. You have all read Information Technology Act at some different location also, different law also. Two sections I want you to write here. Section 3, that enables digital signatures, and section 3A that enables electronic signature. Write those sections. So you can quote those sections that Information Technology Act creates through section 3 digital signatures and through section 3A electronic signature. Just remember that. Then I'm waiting for that section. I'll just read that. Yeah, key provisions. Yes. So this is very, very important. Otherwise, also please have a good reading of section 43 because it defines the penalty compensation for damage to computer system and nature. What exactly will be the job that we subject to these penalties? Then 43A. Compensation for failure to protect data. Someone did talk about 43A, that was correct. Say, suppose I am a bank. I have your passwords. So, your account password. If a hacker hacks into me, the bank system, steals your passwords, misuses your password, and causes you loss. Listen to this carefully. You have a good question to answer. I am a bank. You are all customers. Your bank accounts are with me. Your passwords are in my system. Hacker hacks into my system, misuses your password to withdraw money. You are subject to loss. The question is bank responsible to make good that loss? You have to say yes or no. Once you say yes or no, we'll come back to this section again. Okay. Then section 65, tampering with source document, source data, source program. See, whenever any application is written, it is written in English-like language. That language is called as the source language. That is converted into so it's called a source code. That is converted into something called as an object code. When I buy Tally, I don't get the source code, I get the object code. Suppose when I buy Tally, if I get the source code, you know what will happen? I will start selling the Tally tomorrow because source code is the core program. I can reconfigure and start selling. I don't get the source code, I get the object code. Say government changes TDS rate, government changes GST rate. If that amendment is to be made, it can be done not in the object code, it can be done in the source code. So whenever such changes are made, the updates are done by the vendor, creator of that or owner of the source code. That is section 65. Then section 66, computer related offense. Section 66B, punishment for dishonestly receiving stolen computer source or computer device. Mobile is also a computer device, communication device. It can be used for communication. You can check email, you can send email. Please, whenever you buy take it as a warning. Please, if you buy a second-hand mobile from unregulated shop, unregulated means which are not part of the, say there are multiple shops across India, the chain of shops which sell second-hand mobile, there is chain of merchant which sell second-hand mobile. So if you are buying from a genuine source, that is okay. But if you are buying from a small shop in the mobile market of your city, a second-hand mobile, always ask for invoice first. Second, on the invoice, always ask the shop owner to give an undertaking. The undertaking is that the mobile shop owner is selling to you as a second-hand mobile is a genuine second-hand. It is not a stolen mobile. If you don't take these precautions, and if the second-hand mobile you bought was a stolen mobile, section 66B is going to hit you. जब भी सेकंड हैंड मोबाइल किसी भी दुकान से खरीदें, उससे इनवॉइस ले ही सही, जिसमें उसके डिटेल प्रॉपरली आना चाहिए, एड्रेस सही आना चाहिए, मोबाइल नंबर आना चाहिए और शॉप ओनर की एक डिक्लेरेशन आना चाहिए कि शॉप ओनर जिस मोबाइल को सेकंड हैंड बेच रहा है वो शॉप ओनर ने जेन्युइनली खरीदा है चोरी वाला मोबाइल नहीं है, अगर वो डिक्लेरेशन नहीं है और आपने मोबाइल खरीदा और पाया गया कि वो चोरी का है, यू विल बी हिट बाय 66B. Then 66C, impersonification, identity theft using your passwords. 666D, cheating, impersonification by using a computer resource, and punishment of violation of privacy. You have all read these sections in chapter 1. Yes, we have read that. Then there comes section 43A, sensitive personal data information, SPDI. Very, very, very important. So if I'm a bank, if I have your password, security is my responsibility. If I'm a practicing chartered accountant, and I don't know whether you know it, many practicing chartered accountants have that client digital signatures in their office. You must have seen that. Have you seen those client digital signatures? You know how that token looks like? It's a USB token. I'm just showing you. It looks like this. This is your digital signature. Who will be responsible? So you have to say CA is responsible. Yes. CA is not responsible. No. Again the question. We are reading section 43A. All chartered accountants, practicing members have a huge bunch of digital signatures in their office. It has a keychain and it has a password also of that digital signature. If there is a theft in the CA's office and all digital signatures are taken away and thief misuses the digital signatures, the client suffers loss. Who will be held responsible? Chartered accountants is responsible, say yes. Chartered accountant not responsible, say no. That is section 43A. Hugely important. Banks have to create privacy policy. Again, very, very, very important. Very critical also. Okay. That is, so let us go back to this slide. So that was the discussion we wanted to have. Okay, now we have queries. Wire transfer means electronic. Marking point of physical controls. Where your physical control exists. Mark, okay. The security guard exists, tick mark. Okay, so Ayush, HR, so now we are in question answer session and then last we'll do the case study. This HR module, HR lifecycle is, where does it start from recruitment till termination? So even if you don't find it, it is there in the module, even if you don't find it, through your basic understanding. So first you do a recruitment process, then once an employee is recruited, means there is going to be interview and personal interview and GDPI, then the employee is recruited, then there is a process of inducting the employee, so you call it as induction, training, making that employee aware about or allowing him to be introduced, him or her to be introduced, training, then he is part of the organization, then he or she may leave, so it can be resignation, it can be termination. That is life cycle for an employee in HR. This, how many questions MCQ will be? I am not the right person to answer. I request you to mail to EIS email ID. Yes, they will be asked in exam. 3A, section 3, capital A. Yes, applicable. Yes, good. So all of you have said yes. Menon Rafiq Bhai, yes, not no, yes. CA will be held guilty. Ayush, letter of credit now I want you to read. We have discussed this more than twice also. So please read. Try to get your ideas. Letter of credit is what I am the buyer and you are the seller. Do you know me? No. And you are selling product to me. So you want an assurance that I'll make a payment. I cannot assure my own self to you. So what I do, me the buyer, go to my banker. Please issue a letter of credit favoring Ayush because he is the seller. So once your banker, means Ayush banker gets a letter of credit from the buyer's banker, there is an assurance that if buyer doesn't pay, the banker is going to pay. That is letter of credit. So letter of credit means buyer's banker is issuing letter of credit to seller's banker that don't worry, buyer has credit. That is this letter of credit. No, Pooja, not practically, impractically. Say yes, no. The answer is yes, bank is responsible. Yes. Good. Monica, it's a good question. Must answer that. Very good. So she has asked, what is the difference between Basel and RBI? So see, Basel first is city in Switzerland. When you say Basel norms, so all central bankers of the world, so there is a US Federal Bank, Bank of England, Bank of Japan, Chinese Central Bank, all central bankers of the world meet in Basel. So Reserve Bank of India is also central bank for India. So our governor also goes. So Reserve Bank of India represents a central bank. Basel Committee's collection of all central bankers of the world. That is the difference. Saipa, yes, you have to remember. No, Surbi, you were keeping it in your office. Who has to keep a lock? You. Then no one is going to listen to you. It's your responsibility. Okay. So, so I think we have got a lot of questions we have answered. Now, let us go to the MCQs for the day. By the time you put more queries if you have. Yeah. Just give me a second. So I'm allowed. So I want to allow you to just put your queries. I'll just take 30 seconds to come with MCQs. Yeah. By the time you can post your queries. No, just taking a second. So yeah, we are back. Raghavan, no, that it doesn't happen in letter of credit. It's only assurance by the bank. Bank doesn't credit it to your account. You cannot withdraw it. Okay. So that is answered. So this is the case. Just read it. Okay. Yeah. So let me bring the first question. So now you're answering. I'm refreshing. Yes. 1A placement. Great. Second question. Okay. So let me refresh. Yes. Integration. Great. Third question. It's a giveaway. Great. C. Fantastic. So learned it well. Good. Fourth question. So I've used more than once during our discussion. Okay, so three of you have answered A, B, and C. So right answer is CTR, cash transaction report. I was giving these examples again and again to you. Okay, means see the names are indicative. You could have taken any one, but because we discussed, we want this specific. Okay. So fifth, last question for the day. Yes, so B, most of you will say B. But please understand there is a amendment. Now it is 10 years. So please update your module and you will say B. I kept this question for this purpose only. Now it is 10 years. So just update 10 years. Right answer is D. So that is for the day. Thank you. Complete the MCQ. Now just last 1 minute to exam tips. Nothing we have talked about lot. How to answer question in exam, how to remember, how to create interest. The core has been to bring as much practicality to our discussion as is possible. You have been fantastic batch. Our daily chat score, our average chat score during all these sessions we had has been 250 plus average. Today also we have hit 150 plus. So it is great. Your interaction has been really good. It has allowed to discuss, talk to all of you. So thanks. We just have 30 seconds more. Any query you have, and then we will call this session off for the day. My best wishes to all of you. You become chartered accountants. All of you become chartered accountants in your first attempts, and all of you get at least 80% marks in this paper. That is my wish for all of you. आप सबको बहुत सारी शुभकामनाएं और सीए आप कर रहे हैं, बधाई, और आप जल्दी से जल्दी सीए बने, यही कामना है, यही प्रार्थना है. आपसे ये सेशन लेके बहुत अच्छा लगा. आप लोगों का इंटरेक्शन बहुत अच्छा था. You have been a very good interactive batch. So thanks for this. So I think there is no query. I'll just have a last refresh to the chat, and then after that refresh. Okay, thank you. So thanks a lot. Let us close. We are closing. Thank you. Bye. Good night.